with the Traders Club. Today is March 9th, 2018, Friday. Welcome to the market update. Again, my name is K Kim with the Traders Club. Hope you guys had a good week trading this week. Today, let's keep it simple. We're going to look at Spider, IWM, and the Qs. We'll call it a day. Market is seeing a good week this week. Let's follow up with what we've been talking about on the last week's video. What did we talk about last week? We talked about this bullish piercing candle, right? That was what, March 2nd, which was precisely, that was a Friday. So this was Friday right here. So these candlestick analysis obviously is a good tool to have, or tool to know, to gauge in the minor term perspective. We talked about how in the past we talked about this bullish Harami pattern that formed with this Dragonfly Doji, right? We confirmed that, getting above this previous resistance level. We continued higher, came down, pulled back. What did we talked about on the last week's video? Last week, March 2nd, we talked about Fibonacci level, right? Measuring here to there. Where do we come down to? Exactly to 50% retracement, coinciding with what? 100 SMA. So the SMA. So that's a definitely level. And that's a level that I gave you a couple of weeks ago. Should the price decline? Remember we talked about that a few weeks back. I gave you a few levels to watch. First level was at 268.90-ish, and then the 265.82, which is coinciding with the 100 SMA. So market decided that it was gonna find support at that level, in that vicinity, and that is a kind of a stronger level, because we do see that 100 SMA continues to rise higher, meaning the in primary term uptrend is up, right? So then we pull back, gotten below all these moving averages, these fast moving averages. This is kind of what I'm talking about here. The minor term perspective, things can shift very, very quickly in the minor term. So you always want to kind of look at things more of an intermediate to primary term perspective, because in the minor term, shake and bake, volatility, shenanigan up and down is all part of the process. Once you start trading in this market, you signed up for this. So if you start crying, whining because there's a volatility, well, you shouldn't be in the market. If you want to avoid these, you cannot avoid it, right? So right now, what we have is, we talked about in the last week's video, we talked about this bullish piercing candle 2-day pattern. Well, with the follow through the next day, which was this Monday, you can see that we got 3-day pattern right there. So basically, we got a bearish, right? We got the bearish candle, and then with the bullish piercing candle, and then the next day we had a bullish follow through candle. So 3-day candle was, obviously morning star reversal. It forms with the doji. So if this was a doji, then that's a textbook morning star reversal, but it formed with bullish piercing. So nevertheless, it still has a 3-day pattern of kind of a bullish reversal, morning star reversal type of properties. And then next day we gapped up, and then some shenanigan, and then we had that futures economic advisor resigning, and then we saw that about 1.2% decline in futures. Everybody started panicking. Next day we gap down, gap up. This is the reason why, guys, I don't pay attention to pre-market. I don't pay attention to after hours. I don't care what happens in futures, right? If you've been following me, and you've been with it, this, because it doesn't mean a thing. It just, anything in the minor to micro term, it doesn't mean anything. It's just gonna do what it's gonna do. Tune out the, and you hear this every video, that if you're one of those person that you watch every single video out there every Friday, then mine is one of them. But they always say, we all seems to kind of say this pretty much similar thing, is tune out the noise. And I don't agree on things with a lot of people, other people say, but one thing I do agree on, what they say, is tune out the noise and watch the price action. One thing we can all agree on is that tune out the noise, let the price action guide you. So we did that, and then gone above that 10 EMA, as you can see here, found support there. Finally, we're seeing 10 EMA acting as support in the minor term after we're seeing 100 SMA acting as support there. And we saw gap up today. And we're sustaining that gap, currently up about 1.46% as I record this video. Market should be open another hour and 20 minutes or so as I record this video. So looks like we're getting back up here. I want to give you a little bit of illustration here as to what happened last week, because I guess I already talked about it last week, so I won't go in depth with it. But again, this is the market. This market is not going to make it easy. If you're so obsessive with the short-term market movement, this is exactly how it's going to get you, right? You go long above a pivot or resistance, and you go short above or below support or pivot. That strategy, ladies and gentlemen, is amateur strategy. That does not work. Market is smarter than that. Just because you drew a little stupid line doesn't mean that market is going to completely respect that level. That's why you want to ignore minor to micro term movements, and you want to understand kind of overall trend perspective, overall minor to intermediate term, overall intermediate term to primary term, overall primary term to what? Major primary term. Then when these stupid shenanigans happens like this, you're not gonna sit there and worry. You're not gonna sit there and start, start worrying that the whole thing is gonna crash. So right now though, the good thing about it is when this thing did pull back, it didn't come all the way down to make a new low. What it did was it came down and cultivated higher low. We've been talking about this, that the market has been cultivating what? Higher highs. Is that the characteristic of a downtrend or uptrend? That's the characteristics of an uptrend. And we're talking minor to intermediate term, right? So we got this minor term higher highs. We got this minor to intermediate term higher lows. Remember what we talked about last week? This is a lower low. We don't know that yet until this thing come down and then making a new low. Remember we talked about that. So either this is going to be a minor term lower low, or it's going to be an intermediate term to minor term higher low. Well, now that we're getting near to the highs here, we can categorize this as higher low. But it's not fully confirmed. It will once fully confirm once this thing gets up and pull back, and then we start to see another higher high. If we do see another higher high, then we can fully confirm this as higher low. But for now, it looks like it's gonna be a higher low there, and that's a good sign there. We can even draw a little bit of a bullish support there. If you want to draw on different angles like this, you can also do that. So should the price pull back, you can look at some of those levels to see as a potential support. Next week though, if some kind of shenanigan happens, any kind of pullback or something like that, you want to watch 275, this gap area, as a potential support. If gap potentially can get filled, which is 274, a lot of times the gap area does act as kind of a minor term support. So either gap up level or gap fill level. So it's a 274-ish. 274, 275-ish. If we continue lower, we got 10 EMA there, 50 EMA there. We got these rising uptrend support. Because of this higher low, those are the levels to watch. And we will follow up next week. Keep in mind, we do have a gap area. I'll annotate it right now. We got a gap right here. This is downside gap from early February, and then we got a gap from here. So we got these two gaps. Again, gap areas can act as support. The opposite is true. Downside gap can act as resistance. So when this thing gets up here and starts to fill this gap, probably those levels gonna act as kind of a short-term resistance. Let's go to IWM. IWM start to see lots of strength this week. Well above. This one actually has fully confirmed that this is indeed a higher low. We got the higher highs, right? We've been talking about that, and that's higher low. It's fully confirmed now that we made a new high there. As long as we continue in that fashion, higher lows and higher highs, we want to perceive this as a minor term uptrend. We have filled this gap, right? This gap at they occurred back in January 30th. So, potentially we could see pullback if it does act as resistance. If we do see a pullback, I think next support will be 155-ish to level to hold. We got the 10 EMA residing in that vicinity. So, again, you can draw another support level like this or this way, the two levels there. So those are the levels what should the price decline next week. But I think the strong support is, so we got the level here. Some of these levels to watch is should the price decline next week is 155, 154, or that rising support levels that I've drawn. You can draw like it on your screen. And then obviously next resistance, that all-time high here at 160-ish. So let's follow up. If we do see a pullback, I think it's likely to become another higher low before moving higher. I don't know exactly where it's going to pull back to, but some of these levels will provide you should the price decline next week. One last one, let you guys go here with the Qs here. Qs, obviously seeing strength as well. Qs making all-time high here as well. So after this kind of pullback, and after just about 1 month later, we're back here at the new high. So if you worry that the Qs is going to crash, well, a month later, we're back at it. We're even higher. You see what I mean? So it's not worth worrying about things and worrying about crash. When crash does happen, it will show us. And it takes time. If we go back in history and look at these steep corrections and crashes, it always takes some time before it actually crash actually occurs. Like there's some kind of major topping patterns, or some sort of a topping formation, or some kind of a bearish type or something. It's gonna give us that. But as long as chart is healthy, as long as it continues to be in this uptrend in the primary term, you have to continue to give benefit of doubt to the buyers that they will fight as long as the market is up like this, even if the pullback lies. And how quickly this became almost a V-shaped move higher. So something we talked about is that, when you get up here, you thought that there's going to be a double top. Well, double top is not going to be confirmed until this thing coming down, hitting the neckline. Well, you can see that it didn't come all the way down. Remember what gave you that fib levels last week? Well, that level, it pulled back to where? The first level of Fibonacci right there, coinciding with the prior resistance, new support, and that's the level coinciding with the 50 EMA. 50 EMA is that dark pink dotted moving average. That 50 EMA did act as a little bit of resistance here, and then it flipped, and then now acting as support. We lost the 10, but the 20 and 50 in that vicinity coinciding with that support, which is the first level of Fibonacci, coinciding with the prior level of resistance. Now you can draw a support like this or like that. So we got some levels to watch here. We got this level right here, 170, and the gap fill level at 169.80. Should the price pull back, we got some of those support levels. We got 10 EMA in that vicinity, 20 EMA is rising. So we want to continue to give benefit of the doubt to the buyers. So let's see how it plays out next week. Looks optimistic here. But some of these gaps that we see, these downside gap, probably going to act as short-term resistance in the coming week. So we'll see how that plays out. We'll follow up next week, and we'll talk about these levels again next Friday. Have a wonderful weekend. Good luck trading next week.